Good afternoon, everyone. I'm going to stay here because we have film, so I'm told that if I move left or right, the camera cannot follow. So apologies, I cannot go around, but I'll stay put here. And before you all send me your CV, I'm not a banker anymore, and I don't hire anyone. But hopefully, I can give you some tips as an ex-investment banker as to how life in an investment bank is all about. I hope you can hear me. We have about half an hour together, so I thought I'd focus on just a few items that might be of interest to you. And I'll first talk a little bit about my own career, both when I was an investment banker and since I left investment banking, what I've been doing since then. I will also outline how equities and equity capital markets departments work, and most particularly how they interact with other departments within an investment bank, especially in the context of an IPO. I will also say a few words about career progression from entry level, just out of university, right up to the senior ranks. And finally, I will outline a little bit of the good things about investment banking and also some of the bad things about investment banking and the finance industry in general. And then I think we'll have time for a few questions. So let me start with a little bit about myself. I'm very old now. I started work as a banker in 1991. Which seems like a very, very long time ago, certainly to most of you. And I started work with a firm called SG Warburg back in London, and that was a firm that is now owned by UBS. And I started as a young graduate in London, and they hired me after I had spent a number of months working for them as an intern in New York in the equity capital markets department. And then I joined them as a graduate. I think they still do that. They hire a bunch of people straight out of university, and they train you, and then you're assigned to a particular department within the bank. And I started working on syndicated loans, so very big loans that are made to corporates that are syndicated among a variety of banks because they're too large to be lent by just one bank. And I was based in London, part of that department, which mainly worked for UK corporations. And then I wanted to change, and the department was restructured, and I moved to the bond department. So I was in charge of marketing and executing bond issues, again, largely for corporations in the United Kingdom, so brewing companies and property companies. And after a few years, I thought that was very UK focused, and I wanted to have an experience that was a bit more international. And then I moved to the equity capital markets department that basically works on IPOs and block trades and convertible bonds and equity placements. And that was much more international, obviously. And within a week, I was on a plane to New York to work on a transaction there. And I ended up spending a lot of time in other countries in Europe. I was still based in London, but I spent a lot of time in Sweden, working on IPOs there, and also in Spain. And I ended up working on a privatization of a bank in Madrid. And I got along very well with the people in the Spanish office. I really enjoyed Spain, and I thought, I'd been for 5 or 6 years in London. I'd like to move to Spain. So I had a word with the head of the department. I ended up being posted in Madrid, which was fantastic. That was back in 1995, and I loved the lifestyle. I loved the hours. You didn't start before 10 or 10:30 in the morning. Of course, you worked around until 10:30 at night. Lunch was not before 3 in the afternoon, and very different, but also very busy, because in those days you still had a lot of privatizations, and Spain was opening up. Spain had just joined the European Union. And there were a lot of private companies, companies that were owned by entrepreneurs and families that wanted to come to the stock exchange. So I worked and I won and worked on 3 privatization mandates in a row. One for a gas company, one for the airport duty-free company. And I think it's one of the only 2 airport duty-free companies listed in the world. And then I also worked on the privatization of the steel industry there, which has now been restructured and which is now part of Mittal from India. And also a dozen of private sector companies. And in the meantime, my bank had restructured and grown, and it was no longer SG Warburg. SG Warburg got acquired by Swiss Bank Corporation, which then merged with UBS, which also had acquired Dillon Reed, which also had acquired Payne Webber. So I started work in a bank that was about 1,500 people in total, and at the end UBS was more than 80,000 people. So at the beginning you knew everyone, and then it was quite a different environment. And after 3.5 years in Spain, UBS merged with Swiss Bank Corporation, and I was sent back to London to help senior management integrate the business, and I found that very, very boring. There was a lot of politics involved, obviously. A lot of jobs had to be eliminated, so everyone was jockeying for positions. And I went to see the senior guys, and I told them, listen, I'm not enjoying this at all. I like to do deals. I want to work on deals. And if I don't work on something else, I'm going to leave. So they sent me to Hong Kong. And that was 1999, and I came to Hong Kong where I was in charge of executing equity offerings, executing IPOs and block trades and placements. And within a few weeks of my being there, my bank had won the mandate to privatize the MTR in Hong Kong. And I was the director for UBS in charge of that transaction, on which we worked with Goldman Sachs and HSBC. It was a $1.4 billion transaction. And I worked on that for the best part of 9 months. And also had a team in Hong Kong that did the same thing as I did, but in other countries. And I was responsible for that team, which grew up to 8 people. And we were working on a number of privatizations across Asia, mainly telecom companies in those days. So PT Telkom in Indonesia, Korea Telecom in Korea, Chunghwa Telecom in Taiwan, a number of other transactions in Singapore, the equivalent of the MTR, which is called SMRT in Singapore. I spent a lot of time working for the Port of Singapore Authority, for Singapore Power. And then we came to about mid-2002, where it was the aftermath of 9/11. Soon we were going to have SARS, and business came to a complete halt in Asia. And I was very, very bored because nothing was happening, and I decided to leave UBS. And it had been 12 years, fantastic, but when you're in charge of executing deals and there are no deals to execute, it's not very interesting. And I'm French, so I decided to go back to France, and I spent some time with the French military. And I did that for about 1.5 years, and I traveled to a lot of places. I went to French Guiana, to the Jungle Warfare Training School. I went to Kosovo, to Bosnia. I went to NATO in Belgium. And then by chance, I started discussing with the guys from Macquarie, the Australian investment bank, who had just bought the old bearings business from ING, and I wanted to build up equity capital markets in Asia. So I joined them as a managing director and head of equity capital markets. That was in 2004. And I was in charge of a pretty large team. Basically doing more marketing than execution there, just pitching to clients to do equity capital market transactions. And then I did the same thing with Nomura until Nomura acquired Lehman Brothers, and then I decided I had enough, and it had been 20 years in banking and I wanted to do something else. I had joined as a graduate, like most of you I think, ended up as a managing director in charge of a team of 35 people, and I thought, I can do something else with my life. I'd made quite a bit of money and I had a lot of fun, and I decided to move on. So I did a lot of fun things. I became a scuba diving instructor. I studied wine, and I've got a diploma in œnology. And then I wrote a book, which is called IPO, A Global Guide, which is this thing, 376 pages, which you can buy at a discount, I understand. And the book has also been translated into Chinese, so there's the Chinese version for the mainland. And it's basically a book that teaches students and issuers, private bankers, anyone interested in IPOs, how an IPO works, how it's done, how you execute an IPO. And that was quite an interesting exercise. The first book I've ever wrote. So I had to learn how to publish a book, and it is a discipline. You have to write every day. It was great fun. And then I contacted a number of publications, and I told them, how about you write about my book? And they told me, how about you write for us? So I started doing a lot of articles for the Wall Street Journal, for the South China Morning Post. I publish an article every Monday in the South China Morning Post. But I've also published regularly for a French newspaper. I've published for the China Economic Review. And I started doing a lot of interviews on TV, on radio, in print, because bankers cannot talk about IPOs and issuers cannot talk about IPOs. So they need to find someone to give a comment. So I ended up being on TV and radio about 85 or 90 times now, which is good fun. And then on the back of that, I started working and setting up my own company to work as a consultant, basically helping boards of companies to deal with their investment banks, because I've been a banker, so I know all the tricks. So that's quite interesting. So lately I was a consultant to the board of directors of a company called IHH Healthcare, which just did a $2 billion IPO in Singapore and in Malaysia, the first time company is listed in 2 ASEAN exchanges, which was very, very interesting. And this year I will also be teaching at the Faculty of Law at Hong Kong U, which is interesting because I never studied law. But somehow I gave a presentation to them last year and they liked me so much they got me on as an honorary lecturer. So I'm going to teach future lawyers about everything about IPOs that they don't see as a lawyer, and there is quite a lot. So I've been busy since banking. Now, I thought I'd spend a little bit of time to explain how equity capital market departments work and what they do, and how investment banks work in that particular area. And when it comes to an IPO or an equity placement. And basically, as you can see on the chart, the middle box on the right, which I call the banking side, is all about the bankers that market to and originate transactions to clients. And as you can see, there are people that specialize in M&A, mergers and acquisitions. There are people that specialize in certain industry sectors. There are bankers that specialize in certain countries across Asia, and generalists that work on a bit everything. And there are people that also execute transactions, which is what I was doing at UBS. And then the middle box, the bottom box in the middle is what I call the market side. And it's basically people that distribute these equity transactions that have been originated by the bankers to investors, that raise money, that help raise money from investors for the issuers and the corporations. And there are people who specialize in selling securities to these investors, and once these stocks are traded, there are people who specialize in quoting prices for these stocks that are publicly traded. And then there is a little box, the gray box on the right, which is what I was responsible for, which is equity capital markets. And typically it's a joint venture between the banking side of the business and the market side of the business. And basically what you do is day in, day out, you're in charge of originating and executing IPOs, placements, block trades, convertible bonds. So you're in charge of pitching to clients, but you're also in very close contact with people on the market side, the salespeople, the traders, the research analysts, because what you're in charge of doing is talking to corporations about what the market says, what the market appetite is, and it's quite interesting. But then you interact with a lot of other departments in the bank when you work on an IPO. You've got the legal and compliance department. Obviously, legal department is in charge of mandate letters and agreements, legal agreements, and there are quite a lot when you work on these type of transactions. And compliance is basically in charge of enforcing what we call Chinese walls, basically making sure that people that work on the market side of the banks do not have access to confidential information that investment bankers do have when talking to corporations. Then you also have credit and risk departments, even for an equity transaction, because if you're going to have as a counterparty an investor, if you're going to sell stock to an investor, that investor has to pay you for the stock that you're selling to him, and obviously you need to take a view on its credit worthiness to make sure that he's able to pay you. You've got also corporate communications department. In an IPO, there's a lot of public talk, and you're called by the press all the time. So very often that department will be in charge of maintaining contact with the press. And obviously a lot of very large investment banks like Goldman Sachs or UBS or Credit Suisse, they also have very sizable wealth management or asset management departments in charge of private banking or in charge of managing money for other investors. And in an IPO, these are typically treated like any other investor. There isn't any preferential treatment for these parts of the bank. So that's in a nutshell how an investment bank is organized when it comes to IPO. And if there are any questions, well, I'll be happy to answer these afterwards. Now, a few words about career progression. And investment banks, in most cases, are not flat organizations. There is quite a lot of hierarchy in terms of corporate titles, and I've summarized some of these here, and I'll come back to these. There's a lot of hierarchy in terms of responsibilities and what it is that you do in an investment bank at various stages in your career. And most importantly, compensation. And obviously, the more senior you become, the better paid you are, and by no small measure. Now, various investment banks use different titles, but broadly the equivalences are as I show on the chart. Typically, you would be joining as a business analyst, a BA, or graduate, and then you become an associate after a few years. Then for some investment banks, some people at that point leave to do an MBA if they have joined with only a BA, but I think that is increasingly rare. Most people, I think, would not be joining with an MBA probably. Then you become typically a vice president, and the equivalent to that is associate director generally, or director even. Then you become an executive director, and beyond that is sort of managing director, vice chairman, chairman of a business. Now, all these titles sound very, very grand, but I think they're more there to impress clients than to reflect the reality of the business. If you're a managing director, it doesn't necessarily mean that you're managing a lot of people. In fact, there are many managing directors that manage a team of 2 or 3 people, and your average large investment bank probably has several hundred managing directors. So a managing director is not a CEO, and an executive director is not a member of a board of directors either. But it looks nice on a name card, and I think clients think that because they are dealt with or that their transaction is being worked on by a managing director, that the guy is very, very senior within the organization, which he is, but in relative terms. Now, the first few years of your career is really spent about learning the business. You get to understand the different types of transactions that the bank is working on, how broadly they work, how you market these transactions. You basically shadow more senior people, and you will come back to the sort of things that you would be working on. The following few years are really spent on executing transactions. You now understand how these transactions are done. You spent a lot of time basically working with clients on making sure that these transactions are processed. And you will be in charge of executing an IPO, of all the facets of that, from the award of the mandate to the company being listed on the stock exchange. And that's really what you do up to probably the senior vice president level. Beyond that, I'd say that 80 or 90% of what you do is originating business. By then, you do know corporations, you do have clients that you've worked on, you worked on their transactions and they become your clients, and you're really in charge of bringing in new business, originating business, doing marketing, pitching to clients. And that's what senior people do in investment banks, is they are basically compensated on how much they're able to bring in new business to the bank. And the more senior you become, the more you will focus on that. Now, I'll start with the good things. and then I'll move on to the bad things. But I don't want to leave you on a bad impression. Now, what some of the good things about working in an investment bank, I think at least at the beginning, is it gives you exposure to a lot of different things. Now, you work on clients across a number of countries, and especially when you're based in Asia, typically you would be based, unless you're a country banker, but typically you would be based in Hong Kong or in Singapore, and then work on transactions either in North Asia or South Asia, or Southeast Asia, and it's varied. The clients work are in different industry sectors, different countries. You get to work on different types of transactions: M&A, IPOs, convertible bonds, block trades, restructurings. The work is quite varied at the beginning. It's also possible to rotate between departments. As I mentioned, I started working on syndicated loans, and then I moved on to the bond department, debt capital markets. Then I moved on to equity capital markets. So I've done a number of varied things, always on the financing side. I mean, I've never done M&A. I've done M&A in the context of financing an M&A deal, if you want. But I've always worked on financing transactions, but of a different nature. I've also worked across different countries. I mean, I worked in New York, in London, in Madrid, back to London, then to Hong Kong. Then I left and I came back to Hong Kong. So, and when I was in Hong Kong, I worked on about 12 countries across the region. So there is variety to the work. I think it's also a job that you really work on the ground, and by that I mean is you can do a BA, you can do an MBA, you can do a PhD, but at the end of the day, what you're gonna do in a bank is gonna be very different from what you learned at university. And the only way you're gonna work this business, you're gonna learn this business, is by working on deals, by shadowing other bankers, by gaining experience. I think that's true of any industry, but in banking, I think it's certainly what I learned at university, which was mostly marketing, bore very little relation to what I ended up doing in my job. And the learning curve is very, very steep. And you will learn about regulatory and legal issues. You will learn about negotiation techniques. You will learn about the timetables for different transactions across different countries and different types of transactions. And if you're good, you will progress very quickly. I mean, I think at the beginning of my career, at least, I was good because I skipped a level. Between a graduate trainee and manager, I was promoted directly. I was never an associate because I guess I was probably good at what I was doing, and people were happy with what I was doing, and therefore told me, you don't need to be an associate. You're going to jump directly to the next level. So that happens in investment banking. A lot of people are very senior and very young. I think it's a job where you need a lot of stamina. A lot of the managing directors in investment banks are in their 30s or maybe late 20s. I mean, the good guys. Now, another thing that's interesting in this job is you interact with senior people when you deal with the clients. If you work on a bond deal, you're going to deal with the treasurer probably. If you work on an IPO, equity deal, or M&A deal, you probably will be dealing with the CEO directly or with the CFO. So a lot of interaction with people at a senior level. Obviously, you will deal with different people within their teams as well. But reasonably often, the interaction with the corporates or with clients that are sovereigns or sovereign wealth funds, or in privatizations, you deal directly with the government. You will deal with pretty senior people. When I was working on the IPO of MTR, we were dealing with the head of the Treasury Department, the head of the Transport Department, the head of the Finance Department. And in those days, that was Donald Zhang, who obviously we all know what he became. So interaction was quite at a senior level. And lastly, and importantly, pay is good in investment banking. I'll come back to that, but certainly you tend to be paid more than you do in other industries. And typically you are paid a basic salary, but most importantly, you are paid a bonus. And the more senior you become, the more that bonus becomes a multiple of your salary. And that bonus can be in cash or in a combination of cash and shares or stock options. But at the end of the day, you will end up earning a multiple of a salary which is already a pretty good salary relative to what you would earn in other industries, and obviously that's important. These, I guess, are the good things. Now moving on to the bad things, because there are also bad things about investment banking, and I want to give you the full picture. Maybe not a bad thing, but you work very hard. If you work on IPOs, you will start at 7:30 in the morning. You probably work until 9 or 10 at night, and once you're at home, you will get phone calls, you will get emails on your BlackBerry. You will need to cancel your holidays many, many times. I'm not a banker anymore, but when I was a consultant on this IPO in Malaysia, I had to cancel my Christmas holidays last year because I was dealing with bankers. You will work hard. And that takes a toll, and you'll travel a lot. When you're based in Asia, if you work in a regional role or in a team that deals with clients on a regional basis, you will be traveling 2 or 3 times a week. At first it's exciting. You're on a plane twice a week. After a couple of years, I'll tell you, it is very boring. Because bankers don't take the shaman's flight. You take the first flight in the morning or the last flight at night, and after coming back home at midnight a few times a week, it is tiring. Second, at the start of your career, the work is not very interesting. It is basically almost secretarial. The first things you will do will be not photocopies, but writing PowerPoint presentations for pitches to clients. You will go to meetings where you will say nothing and listen what is being said. You will in fact be asked to take notes of the meeting or write briefing notes for senior people that go to meetings. So at the beginning it's not very interesting. Of course, if you're good and people like and enjoy what you're doing, then that doesn't last for too long. But at the beginning, I think it's a big disappointment for people who have done an MBA or even a PhD and to come and be told to basically do PowerPoint presentations. Culture can be very aggressive. Now, remember, we're in an industry where people are extremely well paid, and what matters to most people is the size of their bonus at the end of the year. So in many cases, it's not necessarily a friendly environment. What matters is what people will think of me, because what people will think of me will determine the size of my bonus at the end of the year. And therefore, I'd rather they think well about me than about you, because I'll get a bigger bonus than you. This is a caricature, obviously, but it is an aggressive environment where people have big egos, and in some cases that's not always very pleasant. So know what you're getting into. 2 more things. Investment banks organizations usually, despite what everyone will tell you, with a pretty short view over the future. U.S. investment banks report on a quarterly basis because they're quoted corporations. So it's important to have the next set of results that impresses investors on the stock exchange. And therefore, when things are bad and the business is not so good, they will not hesitate to retrench people or to sack people. Invariably, the first to go are junior people. So when business is tough, no hesitation in basically sacking people. Hire them 6 months later back. But it is not a job where you have job security. And I think it's important you understand that. You're very well paid, but you're not a civil servant, and you're liable to get sacked if business is tough. Lastly, and I'll conclude with that, then we can open up for questions on the subject of pay. Obviously, you're still very well paid as an investment banker, but it's not what it once was. And the proportion of bonuses as a proportion of basic salary has markedly reduced. Now, basic salaries have gone up a bit, but your bonuses are smaller, and those bonuses are now payable over 3 years or 5 years. There are even clauses where if the business doesn't do as well, they can claim back some of the bonus you had been awarded. Often a big part of your bonus, certainly the more senior you become, is in shares or in stock options. So obviously if the share price doesn't perform, your stock options are worth less. And when more than 50% of your bonus is in the form of stock options in a bank that doesn't perform, obviously you don't get that. So compensation isn't as good as it was. It's still pretty good, certainly compared to other industries. Now, I hope I haven't put you off. I've tried to give you a realistic view of investment banking, both the good things and the bad things, and we don't have a lot of time, just half an hour. You can find more about investment banking and IPOs on my website, which is completely free and which is updated a few times a week. Certainly, I put all my articles in there, which look at transactions and trends, and I do a lot of tweets as well. I think I've done about 10,000 tweets now, so that is also absolutely free. So don't hesitate to look at that. Create traffic on my website, and I'll be happy to take any questions you might have.